All right, good day, everybody. This is Jeremy coming at you with the weekend bias market report for Sunday, June 4th for the trading week ahead. Diving right in, looking at the S&P 500 futures. We've had two massive days of gains over the last couple of days, closing out last week. Futures has opened up just above the 42.75 handle and is kind of in the middle of a range now. So if you didn't catch the breakout on Friday, you're probably looking for a secondary pattern to develop after we come up into the 43.27, 43.28 area. That is previous resistance, horizontal resistance from back in August of last year. So coming up into that is kind of the next target. If we come into that with momentum, we might see it continue up, maybe all the way up to around 4,375, somewhere in there is kind of the higher end of my targets. Past that, for any new entries, we really want to kind of see this formation come up for a little bit, come back down and give a retest to the previous support level, breakout level around 42.20, and then take off for the next leg. So that would be ideal, either that or potentially doing a little bit of a high base here for just the next day or two, giving us a new level of resistance to then be able to trigger on heading up towards 4,400. So that's kind of what I want to see on the S&P 500 futures. But overall, very bullish action. I mean, you cannot complain with that size candle, the closing right into strength for the week. And on the week, we still have a lot of potential room to the upside. The theme of this week is basically AI. I think regardless of any talk of recession or economic downfall or inflation, all of these things that might be coming down the road. We're not sure how severe they're going to be, but they might play a role. All of that is stuff in the future that is not in our face right now. What is in our face right now is tech is just taking off, riding the coattails of the AI movement. Anyone that follows the tech industry right now knows that NVIDIA, I'm going to pull that up right now. NVIDIA just had a monster earnings report here a couple of weeks ago, gapped all the way from about 305 up to 385, continued to run and exhausted itself around 420, and is now just consolidating in a very tight range. This indicator that I have on here for those that are not familiar is a Fibonacci. This is called a Fibonacci retracement. And basically, when drawing a line from the low of a price swing to the high of a price swing, it then plots these percentages, and that helps you kind of rank whether or not something is a mild pullback or consolidation, or how strong of a pullback it is. Anything that pulls back 50% or less is considered to have momentum. So that is an easy way to characterize this. This is not even really broke down past the 23% Fibonacci level, which is a very strong consolidation with momentum. So honestly, even though I would love to see this pull back some to give a new entry point, I am kind of doubtful that we're going to get much of a pullback here. But this kind of aggressive buying is what is driving basically the entire market right now. So we did the S&P, now looking at the actual NASDAQ, which NVIDIA is a part of. Obviously, we are a bit overextended on the daily chart. You can see the RSI down here has been red for a while. The MACD is starting to slow down in terms of momentum here a little bit, but not a whole lot. If we drop this out to a weekly chart, it is still expanding here. So that is a very strong sign. I can't tell you to open up a new position right now, though, in the tech sector. There's still so much in terms of buying action, but it's hard to get in once the run has already done. Whenever we are trading short term, just a reminder to anybody that's new, never chase price action. You either get in when the odds are favorable for you, or you miss it and you have to wait for that secondary pattern. And the secondary pattern on this would be over the next couple of weeks, seeing it come down in some kind of a bullish retracement into the rising 9, and then setting up and teeing up from there up to about 15,000. So that's kind of the ideal scenario that we are looking for. But right now, overextended, not a whole lot we can do on that until we see some consolidation or hopefully a pullback. Going out to the Russell has finally broken out and closed above its range. So compared to the others, which were a little bit overextended, even on the daily chart, even after this massive, massive candle that we had on Friday going into the close, we are not technically overextended on the RSI, and the MACD is just now actually crossing back into solid bullish territory. So there could be a trade on the Russell here. If we drop this into a weekly chart, we did actually close above all of our moving average except the 200 weekly moving average. That is around 1844.5. I'm actually going to update my alert here real quick. So 1844.5 is the new breakout level. If we do poke our heads above that, just because we've run from all the way down around 1737, so we've run about 100 points into this. I'm not going to be super excited about playing the actual break of this, but I would like to see it break and run, and then play that secondary pattern whenever it comes back and retests this like 1820, 1830 level. So I'm going to be waiting patiently on the Russell 2000, wait for it to run, pull back, and give me that nice setup here. Hopefully by that point, the 9-period moving average here will has converged on the rest of these moving averages and will break above, which is a nice bullish signal for the short term. So that's kind of what I'm looking for in terms of the Russell 2000. Finally, last but not least, looking at the Dow Jones. Nothing really to see here, kind of like all the other weeks for the last like 2 months that we've been having this conversation. It has been setting higher lows overall on the weekly chart, which is great. But it has also been setting these lower highs. This is what we call a pinch. It is getting pinched and coiled like a spring between two major levels, one acting as resistance, one acting as support, and it will eventually break one way or the other. So nothing to see here until we get that break, and hopefully whichever way it breaks, it will give us a nice setup to be able to trigger on that. But now is not the time. This week is not the week. We do need a little bit more time on this to develop, so nothing really to see there. Jumping out to some of our commodities really quick, just to end here. Crude light is still kind of fighting in a battle. Some people might try to play the break up above 75, but I think there are other areas in the market that are offering a little bit better risk to reward. Eventually, this will clean itself up, but really, I want to be above somewhere around like 83.50 probably before I'm actually going to get interested in this. I want it to clear all the resistance back from the last like 6 months or so over here. Checking out Bitcoin real quick, not a whole lot to see. It has been consolidating for quite a while now, just in kind of a little descending wedge. If we do get a breakout here above, what's the high of this candle? 28,665. If we get a break above the high of that candle, I might potentially be intrigued to play that. But I'm going to have to see what pattern develops when that occurs. So that would be breaking above the high right about here on the chart. Bam, right there. So a break above that would be very bullish. It would actually help curl all these moving averages back up again. By that point, the MACD would probably be cooperating. So I could see a case for that, but it's not out of the woods. It needs more time to develop. Going out to gold, this is not a good look. I was really bullish on gold here for a while. We had this double top here, which kind of freaked me out and led me to start selling calls on my gold positions, and just trying to cash flow and lock down the risk graph a little bit, offset some potential pullback if it were to occur. We got that pullback, we got a rally, and it got stuffed here at the 50-period moving average. And this does not look good. This looks like either best case scenario, some sideways consolidation here between about, what is that, 2000 and let's just call it 1950. Or on the worst side, this would be kind of the start of a new bearish run, pullback, and then start continuing to deteriorate here back down probably to around 1850. It would be the next stop if that support level breaks. So let's really hope that this 20-period weekly moving average around 1950 holds, because if it doesn't, it could get painful here in a hurry. So if you own gold, either take profit probably, or at least sell some covered calls and protect yourself from the downside. If you don't know how to do that, hit me up in the comments or message me and I can help you out. Not going to go through platinum, palladium, or anything today, silver today. The last thing I would want to show you guys for this week, in terms of indicators, we're going to go out to our high-low indicator, and you will see on this high-low indicator, it oscillates back and forth between the 0 line and then positive or negative. So I have alerts set for when it goes above 50 or below 50. And then when it goes below negative 50 right now, since we're in the positive right now, I want to know if we go from highs in the positive category to back down within this little defined zone. This zone is considered neutral, and then anything below negative 50 would be a bearish indicator for the market with 2 consecutive closes below that line. So right now we've gotten 2 consecutive closes above 50, which is signaling bullish. We have the confirmed breakout again on the S&P. Like I said, maybe a little consolidation here, I hope. If it just continues to run, I will miss the rest of this run because I actually just took profit on this portion of that trade. Wanted to go ahead and lock it in, and I am hoping for a little bit of a retrace back down to test the 42.30, 42.50 area to be able to reestablish a low risk position there. So anyways, if you're already in this trade, congratulations. You might want to chase your stops up a little bit to protect those gains. If you're not in the trade, wait for a secondary pattern at this point. And then last but not least, for our indicators, the advancing declining issues, this is basically just showing that way more stocks, over 2,000 stocks, were putting in advancing numbers, so positive numbers on the last day of trading on Friday last week versus how many were losing ground. So net over 2,000 stocks difference were gaining as of Friday of this last week. So there was a lot of broad index and individual stock buying. To wrap it up today for you guys this week, we have a really light week of news. This is for June 4th through June 10th. We do have an OPEC meeting, so we might see some extra volatility in the oil market. ISM services, PMI data, and unemployment claims on Friday. Honestly, I'm not really expecting much of a move on the market in either of these. I think we're starting to get past these individual news items. The importance of them has started to decrease some, especially with tech just being so incredibly bullish right now on the AI story. That is really what is front and center now in most trader and investors' minds. And if that's front and center, the economic data that we had been following for the last few months on Forex Factory becomes by default a little less important because there's just not enough space in people's brains, the little pea-sized brains, to be able to hold everything. And the AI conversation is what's in front of everybody right now. So anyways, strength in tech, looking to reload on bullish positions in tech if we do get pullbacks, and waiting for some consolidation in the S&P. Those are the 2 sectors really that show trade potential this week. The Dow Jones, not really anything going on, and the Russell, we really hopefully will have some kind of consolidation, high base, and then a breakout, or it will exhaust itself and pull back into the 1820 area before giving us a nice trigger. Hope that helps, guys. Enjoy the rest of your evening here to close out your weekend, and trade safe as always. Hit me up if you have any questions.